Prime and secondary grade yields have tightened sharply in the Australian market, underpinned by broad-based compression, particularly in Sydney and Melbourne. As a result, the national weighted average yield compressed by almost 20 basis points in the third quarter alone. Pricing on core logistics asset sales has driven this compression, and we expect a further 35 to 40 basis points of compression in the cycle through to 2016. Investment activity remains very strong in all markets, including Adelaide and Perth. Transaction volumes year to date in 2014 are 2.9 billion and are set to eclipse 2013 levels and test the 2007 peak of 4.4 billion. Foreign sources of capital are entering the Australian industrial market for the first time, encouraged by recent offerings such as the Super Retail Portfolio and Kmart Distribution Centre in Melbourne that provided significant scale and long lease terms. We expect more of this product to be brought to the market for sale in the first half of 2015 as owners recognise the opportunity at this stage of the cycle. On the occupier side, close to 400,000 square metres of gross take-up was recorded in the third quarter, which is around the same level recorded in the second quarter. This brings take-up year to date in 2014 to 1.1 million square metres. Sydney in particular experienced significant improvement in take-up activity this quarter. Rezoning and reuse activity in South Sydney, North Ryde, Homebush, Epping and Port Melbourne is creating a cascade of occupiers that have to relocate. This will improve rental tension for existing space and ultimately drive a new wave of development activity. There has been very little face rental growth recorded outside of Sydney. Average face rents have been flat in most markets or have recorded moderate falls over the past 12 months. Nonetheless, 2015 is expected to be a period of stabilisation in most markets. Construction activity has increased strongly this year, mostly due to pre-lease and D&C deals committed to in 2012 and 2013. Supply this quarter was particularly solid, driven by the Brisbane and Melbourne markets, which are both tracking ahead of Sydney. Supply this year is expected to exceed the 10-year average for the first time since 2008. I hope you find this information useful, and for all the latest research, market data, transaction information and properties available for sale or lease, please visit Insight or contact one of JLL's state industrial leaders.